Welcome to Channel's Business Global with me, Julianaollanka, from our studios here in London. Over the next half an hour, we'll be looking beyond the business headlines by giving you in-depth perspective on the stories that are affecting all of us. Coming up on today's show, Kenya has raised 108 billion shillings, the equivalent of $1 billion in the country's first Eurobond sale in 2 years. With borrowing currently standing at 69% of GDP, is long-term efficient management of the country's debt profile sustainable? I'll be putting that question and more to Agnes Gatha, a London-based government and corporations consultant at GBS Africa. And Nigeria's High Commissioner to the United Kingdom, Ambassador Sarafa Tunji Ishola, recently hosted a group of highly accomplished British Nigerians in efforts to boost dialogue between the two countries. Channel's Business Global gained exclusive access and will be sharing that with you shortly. Then later, according to Deloitte, Africa's automotive industry is gradually breaking away from traditional sales models to support a digitally led future. Itop Ikpe, the CEO and founder of AutoCheck, will be joining me from Lagos to discuss how the firm's official partnership with the Association of Motor Dealers of Nigeria allows car buyers to access everything they need to purchase a car through their smartphone. But first, let's start the show with business news from here in the UK, where on Wednesday it was revealed that average UK house prices surged 13.4% year on year in June, the final month that buyers can take advantage of the stamp duty holiday. According to the Nationwide Building Society, the average price of a UK home has now reached £245,432, the highest level since November 2004. The figure is 0.7% above May's price. In other British business news, Sajid Javid, the newly appointed Health Secretary, has told British lawmakers vaccine numbers are heading in the right direction, allowing July the 19th to remain the target date for lifting all coronavirus restrictions. This comes despite the fact that positive COVID cases are increasing in pockets across the country. Meanwhile, the investigation into who released CCTV video of the now disgraced former health chief, Matt Hancock, kissing his aide is ongoing, and according to security sources will be the easiest leak inquiry in history. Prime Minister Boris Johnson is facing increasing scrutiny over his handling of the affair, with critics questioning how Hancock managed to survive serious allegations of unlawful behaviour, cronyism, lying, ineptitude and fatal mistakes in the handling of the pandemic. Well, for more on this, I'm now being joined by our business correspondent, Simon Pusey. Simon, it's a big ask, but can Sajid Javid restore some faith in the health ministry?
Well, I think he kind of almost has, just because his personality is quite a big one. He's quite established within the Conservative Party. Obviously, he was the Chancellor before he had that falling out with Dominic Cummings and the Prime Minister around a year ago and resigned, and then Rishi Sunak was brought in. So I think he's, from a perspective of kind of steadying the ship in terms of that department, he's done quite a good job already just being him and going in there. He's also said things that are quite popular, I think, with the party and with the country. He's said that, we're going to have to learn to live with COVID-19. He says he doesn't see any reason why we can't reopen fully on the 19th of July. And he says that despite cases rising, the number of deaths are still pretty low. So I think that's kind of what people want to hear. They want to have some positive news after a long time of mainly negative news. And this is all despite the Delta variant, obviously, that's spreading quite fast. And also a lot of school children are being sent home at the moment. Some startling figures out that show that about 1 in 20 children over the last few weeks have been off school due to COVID-related issues, which shows that now it's sort of affecting young people maybe more than older people. But yeah, that positive tone, I think, is a good thing for the party, for the government. And boy, did they need it, because it's been a rough couple of days, couple of weeks for the government, for the Health Secretary, Matt Hancock, former Health Secretary now. And I think a lot of people asking why Boris didn't sack him when all of this scandal first emerged. It's obviously like one of many things that's happened, but this really was the straw that broke the camel's back. Obviously, we're looking at 127,000+ deaths, and all of the many accusations of incompetence and cronyism that have gone with that, with him maybe handing out contracts that maybe he had ties to, and obviously that all needs to be investigated, and that's accusations and allegations at the moment. But there's so many different things that it's surely far easier for Boris to actually sack the health secretary instead of having him resign a couple of days later. And I think that's quite embarrassing for him and his judgment. Quite a few questions over his judgment. The government will commission an independent inquiry. They've already said they will do that, but they say that won't happen until the spring of next year. They're saying that obviously, all focus should go on tackling the coronavirus at the moment and ending the pandemic. But it will be interesting to see what comes out of that, because I think already the government are kind of turning on the former health secretary and trying to make him the scapegoat, because obviously he was the sort of poster boy for it. He was on TVs every single day, and now he's not there. It is quite easy to point the finger at him and say, well, a lot went wrong as a result of him. But yeah, it does look like 19th of July we will be reopening. So I think from that perspective, that is positive. And currently the health department have that kind of shining light at the end of the tunnel to look to.
Thank you, Simon.
Thank you.
Last weekend, Britain's most influential people of African and Caribbean heritage met with Nigeria's High Commissioner to the United Kingdom, Ambassador Sarafa Tunji Ishola, in efforts to boost dialogue between both countries.
The number of Nigerians in the UK particularly is phenomenal. We see Nigerians leading all sorts of organisations here. So Nigerians are probably, in terms of the black population of the UK, by far the most influential.
I feel that we have a lot to contribute to Nigeria. We are the diaspora, the brain drain, and it's time for us to then begin to take our expertise, our knowledge, our power, our influence back to enhance our country.
Well, the point about the diaspora is it's a set of role models of people who have got Nigerian heritage but have made something possible. And we are the antidote to those that say you can't do things in Nigeria, Nigeria doesn't work, etc., etc. So the more we can connect the diaspora with the nation, I think it will be in everybody's best interests.
The purpose of this interaction and the theme is pulling together. When we pull together, we can achieve a lot. The narratives that we have about our country is not so good enough. Whereas I have no doubt in my mind that Nigerians are doing well all over the world. So as we get the negative vibes, we should also get the positive vibes. Because Nigerians make Nigeria. I want us to live here today with one theme, and the theme is pulling together to develop Nigeria. God bless the Federal Republic of Nigeria. Thank you.
Thank you. Well, my hope is that we will form some kind of support club, that this group of people will stay together, exchange experiences, help each other out, and drive what the High Commissioner, His Excellency, has asked us to do, which is to help improve the lot of the Nigerian people.
So I think that something meaningful will come from this. I think that we'll find some people who will want to engage with His Excellency to try and foster better links between Nigeria, the homeland, and Nigerians in the UK diaspora.
We are a vital part of Nigeria. We are an extension of Nigeria. I can tell you that everybody here, every Nigerian here, is a proud Nigerian wanting to contribute to Nigeria in some way, shape or form.
Kenya has raised 108 billion shillings, the equivalent of $1 billion in the country's first Eurobond sale in 2 years. The bond was oversubscribed, with over $5.4 billion offered by investors. The East African nation projects its economy will expand by 6.6% this year, outpacing the projected global rate and that of sub-Saharan Africa. But with borrowing currently standing at 69% of GDP, is efficient management of the country's debt profile sustainable? Let's ask Agnes Gatha, a government and corporations consultant at GBS Africa. Agnes Gatha, it's always a pleasure having you on Channel's Business Global. So Kenya went to the market seeking $1 billion for its first Eurobond sale in 2 years. It was oversubscribed. I believe it came in at about $5.1 billion worth of interest. What do you take from this?
Well, it depends on who you speak to, Juliana. Mixed reactions from the administration. They think this is a confidence boost on Kenya's economy and the economic recovery strategy that the government has laid out. However, if you ask the taxpayers who are going to be repaying back this debt, they're very worried and they think that the government should not be borrowing money, and also curious why investors would continue lending Kenya money despite the debt levels, as you know.
Absolutely. You're talking about a boost of confidence. Experts say Kenya's risk profile has been lowered, and this is mainly due to the public backing of the IMF and the World Bank and others. What kind of work do you think has been going on behind the scenes to, reduce some of the risk?
Juliana, Kenya has been to the international capital market 7 times now. So it's an economy the investment community is already aware of. You know their risk profile and you know where you stand with an economy like this one. However, the return of the Bretton Woods institution like IMF and the World Bank certainly gives the investors some confidence that Kenya will not fall into balance of payment problems or risk of default just because we have that sort of support from IMF and the World Bank. Remember, they have offered Kenya close to $4 billion, to support Kenya's recovery post-COVID, to support Kenyans manage its budget, but certainly a lot of borrowing and certainly having IMF and the World Bank in the country certainly encourages international investors, particularly from the capital markets, to lend the country money.
Absolutely. Concerns about overburdensome debt isn't obviously isolated to Kenya alone. Several African countries some would describe them, are in debt traps. How sustainable is this current level of borrowing, currently standing at 7.4 trillion shillings, equivalent to 69% of GDP?
Juliana, the most surprising thing is Kenya, just this year, Kenya will spend at least 11 billion servicing the debts. Remember, we have very expensive syndicated loans that Kenya has been borrowing over the years. I've said that we were back in the market last year. We issued another Eurobond, $2.5 billion. So certainly, in my view, not sustainable. However, there has been commitment by the government to be transparent in the way they manage the proceeds. They've also been asked by the IMF before they release the 2.3 billion they've offered to the country. There's some structures that need to be put in place. One of those is ensuring the state-owned enterprises are managed well. There's efficiency in the revenue collection. Also, they need to reduce the government wage bill. So certainly some commitment. However, this is a burden to the taxpayers. Remember, we are borrowing to pay debt. How can that be sustainable? And who is going to pay for it? Absolutely. It is going to be you and I. The government has to collect taxes. It has to tax an economy that is already overburdened.
Absolutely. You say it's overburdened, but according to your finance minister, growth this year is pegged between 6.3 and 6.6%, more than most sub-Saharan African nations. Where is this coming from? What are the economies that are kind of standing out, or the sectors of the economy that are standing out as we recover from the pandemic?
The growth certainly is pegged on recovery or hopeful recovery of the tourism sector. Remember, Kenya wants to position the tourism sector to be at least the top 10 long-haul destination. Reinvesting in the agriculture sector, a story we've gone on and on about, ensuring you invest in technology in the agriculture sector. Another area of investment will be manufacturing sector so that we can create jobs, and the tech sector. So a lot of key sectors that the government has prioritized, and the continued investment in the infrastructure, hoping that improves the economic activity, and thereby hoping that it will support the government in terms of their revenue collection. But certainly the economy looks rosy. Hopefully the external shocks will not impact the growth sort of prospects.
Absolutely. And of course, the most important thing is that it should trickle down to the everyday man and woman in Kenya. Agnes Gatha, Government and Corporations Consultant at GBS Africa. Always a pleasure speaking to you on Channels Business Global. Thank you, Agnes. Coming up on Channel's Business Global, I'll be discussing the future of auto retail in Africa with the CEO of AutoCheck, Itop Ikpe, who'll be joining me from Lagos. See you after the break. Welcome back to Channel's Business Global with me, Julianaollanka, from our studios here in London. In a few minutes, I'll be discussing the future of auto retail in Africa with the CEO of AutoCheck, Itop Ikpe. But before then, here's some company news for you. British luxury group Burberry is to begin the search for a new chief executive after Marco Gabbetti said he would step down after 5 years in the role. In a statement, the company said he had notified the board of his intention to step down at the end of the year to take up another opportunity that will enable him to return to Italy and be closer to his family. Gabbetti will become the new chief executive of Italian luxury group Salvatore Ferragamo, famous for its shoes. Gabbetti was brought in to run Burberry in July 2016 after leading a successful turnaround of French label Celine. Shares have doubled in value under his watch and swiftly plunged by almost 8% on the FTSE 100 following the announcement of his departure. The stock market value of Facebook rose above $1 trillion earlier this week after the social media company won a significant legal battle against an American regulator. The US government and 48 states and districts sued Facebook in December last year, accusing the tech giant of abusing its market power in social networking to crush smaller competitors. A US district judge ruled that the lawsuits were legally insufficient, sending the shares soaring 4.2%. Facebook has now become one of 5 big American tech giants to pass the $1 trillion milestone. Observers say the fresh valuation represents a vote of confidence in Facebook's ability to withstand regulation assaults from across the world. Cosmetics retailer Revolution Beauty is set to join the London stock market next month in a listing that could be worth £500 million. Founded just 7 years ago, the firm is known for using social media influence to market its products, which it sells through more than 11,000 stores across 5 continents. In the 14 months to February, it recorded £157.6 million in sales, alongside £13.1 million in underlying earnings. The emergence and adoption of digital technologies is changing the retail landscape across all industries, with the used car market being no exception. According to a recent report from Deloitte, Africa's automotive industry is gradually breaking away from traditional sales models, and AutoCheck has recently partnered with the Association of Motor Dealers of Nigeria to allow car buyers in the country to access everything they need to purchase a car through their smartphone. The CEO and founder of the firm, Itop Ikpe, joins me now from Lagos. Itop Ikpe, thank you so much for joining me on Channel's Business Global. It's a pleasure to be talking to you again. So COVID-19, it's accelerated the digital push in several industries. How has it been taking place across the used car sales business in Africa?
Thank you very much for having me again. I think that COVID-19, I mean, as you know, across several businesses, it's really forced the agenda for digitization, for remote work, for remote interviews like what we're having now. I think this has really become the norm. So on one end, I think if you think about it, right, a lot of the tools that we're using pretty much were existent a long time ago. Zoom in itself has existed for over 10 years. We've always had Google Hangouts. Skype has been present. And what it did was it forced us to recognize that we could do things in another way, right? Because typically the world had been designed around probably about 150 years of a working culture driven from industrialization. And basically we're now moving to a very fast stage of digitization. So I think if you look at that overall and you apply that to so we're not seeing anything that I think is strange or negative. I think it's actually positive because it's made people much more effective. We have a much more better way of handling our operational cost as well. I think in the automotive sector, what is basically also driven is the importance of digitization in the automotive sector. So particularly for AutoCheck, we are focused on digital approvals and applications of loans by consumers. We're trying to drive accessibility and affordability for customers. So it works 100% in our favor because we're finding banks able to scale up their auto lending portfolios, dealerships can build their businesses, consumers can access loans, all from all remotely. And that's basically why our technology is doing so well, and we've seen such a great reception from the market. So I think in general, this is just the beginning of the wave in terms of digitization, but I think it's all positive, and there's so many benefits that are going to come out from this, especially with technology companies.
Absolutely, it is all positive, and I think sometimes some societies can take for granted just how easy it is to do everything online. I'm sitting here in London. I think for most of our viewers that are in London or in America, you usually do buy a car online. Surely, of course, you're going to take it for that test run, but you buy it online. If you are doing like a hire purchase or a car leasing system, that's all done online. In practical steps, can you just explain how in Nigeria, for example, you can use an ecosystem like AutoCheck and others to purchase a vehicle?
Yeah, I think there's been a rapid adoption over time. So I think the typical first digitization process for car purchases came through classifieds, where you would find classifieds businesses. Typically, people would list their cars independently, and anyone could go there and call. I think that's the first wave of digitization. And then you then started to see transactional market people are typically doing a bit more in terms of inspection reports, ensuring that the cars are verified. And for AutoCheck, we really moved the entire process into the future, where the biggest issue we find in the market is not necessarily verification of cars or availability, but it's actually access to finance. If you look at economies like we're talking about, you're talking about a 65 to 70% average in terms of access of institutional finance towards automotive transactions. If you look at Sub-Saharan Africa, for instance, it's less than 2% credit penetration in automotive transactions. So fundamentally, the market that we're seeing is false because there's so much opportunity that come through access to credit. And that's what we basically focused on, which is what we call the new wave and a new way to do things. So that's how we're basically focused, ensuring that people can access auto loans, can buy their cars through auto loans effectively, 100% digitally, making applications online. The banks can receive applications 100% digitally. The banks can make approvals online. Dealers also have our software and use it to track when people are making applications online. And I can also focus on ensuring that people get their cars delivered. So that's how we're typically focusing on ecosystem. But I think in general, there's been a large wave of digitization across the board. I think where you still find issues are around trust and verification, but there are a lot of platforms doing things to improve this. And I think that there's only one way forward in terms of automotive purchases, and that is through digitization.
Absolutely. Deloitte just said that in their recent report. You may or may not know, Etop, but inflation is a major topic of discussion across global business at the moment. It's high in the UK. It's also very, very high in America. That's obviously because there was so much pent-up demand. Now everybody's free. They want to start spending again. But one of the main reasons that's been cited, particularly in America, is buying used cars. It's a huge market at the moment. What's it like in Nigeria?
I think first of all, the upward trend in demand for used cars really it's a COVID-driven situation where a lot more people are more concerned about their health and are looking to rely. I mean, if you think about these markets, a lot of people were reliant on public transportation, but a lot of people are, because of the COVID situation, a lot of people are rapidly migrating towards more personalized forms of transport. Now, what this technically means is that that's what's driving the demand overall. And 95% of the cars that Sub-Saharan Africa is reliant on emanates from the US, Europe, Asia, right? So we're seeing that demand, and we're seeing typically that demand that is being driven, and we're seeing that reflect in the market. So coupled with the fact that already with COVID also impacting Sub-Saharan Africa, there's also a demand as well and a surge for used cars. But this is coming off the fact that, the prices have already increased internationally, and we're seeing that effect because the market is largely import driven. So what then happens as well, especially with recently fluctuating FX prices, is that there's definitely a higher price in terms of what people have to pay for cars. And this is why access to credit becomes so important, because affordability then becomes an issue. We're competing globally. We're seeing that the markets are connected. We're seeing what COVID has done. This is really where this is really a time where it's so important to fix the issues that are associated with ensuring that people can get affordable and accessible credit for auto financing. If you look at the average GDP per capita, like I mentioned, is $1,250 in Sub-Saharan Africa. Average price of a car is $5,000. So if you look at that, right, you realize that if there's anywhere where access to credit is so important for automotive finance, it's in Sub-Saharan Africa. And this is why we're primarily focused on ensuring that we solve this problem. We're supporting financial institutions to scale up the automotive lending process and ensuring that dealers are also extremely happy with our business model.
Absolutely. Freedom of movement and mobility is so vital to a post-pandemic recovery, isn't it? And surely AutoCheck are at the forefront of that digital revolution. So thank you, Itop Ikpe, CEO of AutoCheck. Thanks for joining me on the show. Sadly, that's all we have time for today, but do get in touch with your comments and suggestions. I'll see you at the same time next week for more in-depth business analysis on Channel's Business Global. Goodbye.